What if I told you there is a company sitting on nearly $2 billion in physical hard assets, but the stock market is pricing it at just $500 million? Now, what if I told you this same company just reported 3,650% revenue growth year over year, crossed into GAAP profitability, and quietly locked up $750 million in fresh tokenization contracts, all in the last few months alone? You would probably say, that sounds too good to be true. I get it. In this market, every AI story sounds like the next big thing until it does not. But today, we are not going to talk about promises. We are going to put every single one of those claims under the microscope, line by line, deal by deal, dollar by dollar. Welcome back to Smart Stock Sam, your one-stop solution to filter market noise and find the valuable and real signal. Here, we chase conviction backed by real numbers. And right now, our conviction is pointing squarely at DataVault AI, trading on the NASDAQ under the ticker DVLT. Today, we are doing a complete deep dive breakdown. The massive GPU fleet, the explosive real-world asset tokenization pipeline, a London expansion that most investors have not even noticed yet, and a revenue growth chart that looks more like a vertical launch than a curve. By the end of this video, you are going to understand exactly why the math on this stock simply does not add up at its current price, and why the smart money is already quietly moving in. Let us get into it. To understand what is happening with DataVault AI right now, you have to start with the three numbers that change the entire financial trajectory of this company. First, a hardware-backed valuation floor sitting between $1.44 billion and $1.92 billion. That is not projected future value. That is the current market price of their 48,000 GPU fleet. Second, the company officially reached GAAP profitability in the fourth quarter of 2025. And third, $77 million in fees generated from their tokenization pipeline in just the first quarter of 2026 alone. Think about that third number for a moment. In a single quarter, they collected $77 million from contracts they had already signed. These three numbers tell a story of a company that has quietly crossed from the speculative phase straight into the execution phase. And that transition is precisely the moment when market valuations begin to wake up. But how do three seemingly different things, graphics processing units, GAAP profit, and tokenization fees, actually connect into a single business? That is where DataVault's unified engine comes in. And once you understand it, the whole picture snaps into focus. Picture a three-legged stool. The first leg is their edge infrastructure, 48,000 physical GPUs deployed across micro-edge sites in the most data-dense urban centers in America. The second leg is real-world asset tokenization, converting physical, illiquid assets like mined metals, agricultural data, and geothermal energy into digital tokens that can trade instantly and generate immediate, high-margin fees. The third leg is their global market platforms, proprietary tools that capture, secure, and monetize the engagement data flowing through the entire system. What makes this architecture genuinely special is that these three legs do not operate in isolation. Every new GPU site DataVault activates drives more tokenization volume. More volume generates more data feeds platform yield. It is a self-reinforcing closed loop, and the loop tightens with every single deployment. Now let us zoom in on that physical moat, because the rollout pace here is genuinely aggressive. While the big hyperscalers are locked in multi-year permitting battles to build massive centralized data centers that require enormous power grids and years of construction, DataVault is going local and going fast. They are already live in New York and Philadelphia. By early July of 2026, they plan to have 30 more cities activated. Their ultimate target is 1,000 micro-edge sites spread across 100 United States cities, and they want to reach that milestone by the end of this year. Each individual site houses 48 GPUs, providing localized, low-latency AI compute, right at the point where data is actually being created. Here is the question worth really sitting with. Could Amazon, Google, or Microsoft replicate this distributed micro-edge footprint in 12 months if they tried? Almost certainly not. Power grid approvals, real estate negotiations, permitting delays, the structural barriers are enormous for the centralized players. DataVault is filling a gap the giants physically cannot reach, and they are filling it right now. Think about the compounding effect here. Every city they activate generates usage data, which feeds their AI analytics layer, which makes the next city deployment more efficient and more profitable. This is not just a network build, it is a data advantage that grows with every site. And here's what makes this hardware story even more compelling. It is future-proof in a way that the broader market has not even begun to price in. We are entering an era where quantum computing poses a very real, credible threat to current encryption standards. Virtually every security system running today was built on assumptions that sufficiently powerful quantum computers could shatter. DataVault's SanQtum AI platform is built from the ground up with post-quantum cryptography baked directly into the architecture, paired with a zero-trust security framework deployed at the absolute network edge. On top of that, the hardware is air-cooled and lower power, which means DataVault can operate entirely outside the traditional hyperscaler supply chain constraints. They do not need a massive power grid. They can go where Amazon and Google simply cannot. When you combine quantum-resistant security with modular distributed infrastructure that runs on lower power in locations the giants cannot serve, you are not just competitive with hyperscalers, you are bypassing them on an entirely different track. Consider this. What happens the first time a major enterprise client gets a security breach because their legacy infrastructure was not quantum-ready? The migration to quantum-resistant infrastructure will not be gradual. It will be an emergency sprint. And DataVault will already be there, already certified, already deployed. Now let us talk about the real rocket fuel in this story, because the tokenization pipeline is where the numbers start getting jaw-dropping. In just the first quarter of 2026, DataVault signed $750 million in total tokenization contracts. From that pipeline, they already captured $77 million in associated fees. And I want to be clear on what these fees represent. This is not deferred revenue sitting on a balance sheet waiting to be recognized. This is immediate, high-margin income flowing into the business right now. Let us walk through the specific partnerships because the diversity and scale of these deals is remarkable. First, there is a $78.2 million initiative with American Strategic Minerals to tokenize United States mined metals, including antimony, a critical material that appears on the National Defense Supply Chain Priority List. In this deal, DataVault does not just earn a service fee, they earn up to a 20% equity interest in the partner company itself. Ask yourself, how often does a technology infrastructure provider earn equity in the raw materials it is digitizing? This is a genuinely novel deal structure. Then there is Coppercore, where DataVault is minting $100 million worth of digital copper tokens, bringing physical commodity exposure directly onto the blockchain. And with Triton Geothermal, DataVault is the exclusive technology provider for a $125 million tokenization offering, generating up to $8 million in initial fees, plus an ongoing 5% participation fee that continues to compound as the project matures. They are literally putting the Earth's natural resources on the blockchain and collecting a toll on every transaction. But it does not stop there. Through their partnership with AgSensor Solutions, DataVault is tokenizing agricultural data, everything from real-time soil sensing to carbon tracking outputs. This is the convergence of precision farming and institutional-grade finance. And on the retail side, they have listed a portfolio of meme coins on the Biconomy exchange, including the Dream Bowl coins linked to NFL alumni health and the Josh Gibson commemorative coin. Whether it is geothermal energy contracts worth hundreds of millions or community-driven digital assets with retail liquidity, DataVault is building the underlying rails for every category of asset to enter the digital economy. I genuinely cannot name another company right now with this breadth of real-world asset exposure across defense metals, commodities, agriculture, clean energy, and consumer digital assets simultaneously. Now let us go straight to the financial results, because this is where the skeptics have to stop and pay attention. In the fourth quarter of 2025, DataVault reported revenue of $33.8 million, a 3,650% increase year over year. Let that number breathe for a second. 3,650%. For the full fiscal year of 2025, total revenue came in at $39.1 million. But the most important data point on the entire chart is not the top line, it is the bottom line, a net profit of $661,000, marking the first time in the company's history that they crossed into GAAP profitability. This is not creative accounting. This is not an adjusted EBITDA figure loaded with asterisks. This is the real thing, proof that their model generates more revenue than it costs to operate at scale. They have officially moved from the build and burn phase into profitable execution. And if you look at the trajectory, Q1 revenue alone in 2026 was already showing the acceleration that a $200 million full-year target would require. The pipeline is not a hope, it is a schedule. And management is not planning to coast on that milestone. They have officially reaffirmed a $200 million revenue target for fiscal year 2026, an implied growth rate of roughly 400%. Now, normally, a projection like that would trip every alarm I have. But look at what is sitting behind it. Current assets of $142.9 million, zero long-term debt, and over $116 million in working capital. Zero long-term debt. In a high-interest rate environment where growth companies are being crushed by the cost of capital, DataVault is sitting in a debt-free position with more than enough firepower to execute their growth plan without diluting shareholders or borrowing at punishing rates. That combination, 400% growth guidance backed by a clean debt-free balance sheet, is genuinely rare among companies growing at this speed, and they are not limiting this ambition to the United States. DataVault has officially made their first international move, landing in London through the acquisitions of CompuSystems and API Media. Together, these assets form what the company calls the Event Citadel framework, a data capture and monetization engine designed to extract yield from engagement data flowing across the entire DataVault network. London is the ideal anchor for this expansion. It sits at the precise intersection of global institutional finance and the leading edge of digital asset innovation in Europe. The Event Citadel is not just a data product, it is a revenue layer being built over one of the most financially active and data-rich cities on the planet, and it feeds directly back into the same closed-loop engine that is already driving the domestic business. So how does every piece of this, the hardware, the tokenization fees, the profitability, the London footprint, actually come together as a value proposition for the investor? Stage 1 is the physical micro-edge network, the hardware capacity forming the foundational compute layer. Stage 2 is system embedding, where proprietary software tools, data value and data score, get woven directly into the infrastructure at the edge. Stage 3 is monetization, the real-time yield flowing from tokenization contracts, equity participation in partner companies, and the Event Citadel data platform. As each stage compounds on the last, the entire system becomes more valuable and more defensible. More hardware means more software embedded. More software means more yield generated. More yield means more new tokenization deals get attracted to the network. It is a flywheel, and it is already spinning, and the institutional community is beginning to recognize it. Maxim Group currently holds a buy rating on DVLT with a price target of $3.00. With the stock recently trading between 80 cents and 84 cents, that represents a potential upside of approximately 250% from current levels. Beyond analyst coverage, in the fourth quarter of 2025, we saw meaningfully increased holdings from institutional powerhouses including Vanguard and BlackRock. When firms of that caliber start quietly accumulating a sub-$1 stock with a $2 billion hardware floor underneath it, that is not noise. That is conviction capital positioning itself before the broader market connects all the dots. Now, before I give you my final take, I want to be completely transparent with you because transparency is what Smart Stock Sam is built on. Nothing in this video is personalized financial or investment advice. This content is strictly for informational and educational purposes only. All investing carries risk, including the risk of losing your entire principal. DVLT is a small-cap stock and carries significantly higher volatility than large-cap equities. The figures and projections discussed here are sourced from the company's own public disclosures. Past performance is never a guarantee of future results. Please always conduct your own thorough due diligence and consult a licensed financial advisor before making any investment decision. Never put money into any single position that you cannot afford to lose. Here is the bottom line. DataVault AI has a hardware-backed valuation floor of nearly $2 billion, sitting underneath a market capitalization of roughly $500 million. They have proved their model works with a GAAP profitable quarter. They carry zero long-term debt and over $116 million in working capital. They signed $750 million in tokenization contracts in a single quarter and are already collecting fees from those deals. They are expanding globally into London with the event Citadel framework, and they are deploying infrastructure that the hyperscalers simply cannot replicate at this pace or at this cost. The math does not lie. A $2 billion asset base sitting under a $500 million market cap does not stay that way forever. The window between when the smart money knows and when everyone knows, that is exactly where the biggest opportunities in investing have always been found. Now, I want to hear from you directly. Do you think the broader market will finally recognize DataVault's true asset value before or after the full 1,000-site micro-edge network goes live by year-end? Drop your honest answer in the comments section right now. I read every single one, and I genuinely want to know where you stand. If this breakdown gave you real value today, please smash that like button. It takes 1 second, and it helps this channel reach more serious investors just like you. And if you are not already part of the Smart Stock Sam community, hit that subscribe button right now so you never miss a deep dive like this one. And if you want to go a step further and directly support the research and work that goes into every video, you can send a super thanks right here through YouTube's support feature. Every single contribution goes straight back into the tools, data, and time that make these videos possible. Until next time, stay sharp, stay disciplined, and I will see you in the next video.